from Georgia State. And the perspective I asked him to look at is we're also going to look at the people that pay taxes and, you know, how collectability does that. His CPA firm does sales tax returns, property tax returns, helps with tax. So we're looking just for a different perspective. And Brad, if you come forward and share with us, we'd appreciate it.
Thank you, Steve. Appreciate the opportunity. As predecessors who spoke earlier, heard some great ideas this morning, and I'm incentivized that hopefully I can make a small difference. I am looking at it from a different perspective, and I apologize I don't have entertainment value with visuals and whatnot. I didn't know that part of it, but so I'll do my best to kind of summarize how I see things, really from a business point of view. My clientele, as Steve said, is primarily mid-market businesses and individuals, and so my practice focus for 20-plus years has been really with primarily income tax, and second to that would be business personal property tax, sales tax, and payroll tax. It kind of follows that. I haven't worked in some of the other esoteric fees and levies that I heard earlier, but I'll try to address those issues, and I'll look at it somewhat theoretically as well as practically in my comments. You know, business owners are really looking for, I think, clarity and certainty on their tax obligations. I think that there's so much uncertainty in the business world. This is one area that they really would like some clarity and certainty. You know, most Georgians are proud to pay their tax, and they want to do the right thing, and they want to get it right. They don't want to have changes. They don't want to have surprises. They don't want to have a lot of interpretation of what doing the right thing is. So that's kind of where I'm coming from. And Georgia has a very broad-based tax system because they have many tax systems. We have income tax system. We have sales, use. You go on the list and compare it with other states and some of the tax research services that are out there. You'll see Georgia has most taxes, a little bit of this and a little bit of that. And that's a good thing. And we also have, as I've learned this morning, a lot of layers and a lot of jurisdictions that have to administer different taxes and different pieces of that. So that adds to the complexity to the Georgia businessman in trying to evaluate what needs to be done and how he or she would comply. Georgia is a very business-friendly state. My clientele is appreciative of that. The people that have moved here are appreciative of that. Georgia has made incentives to bring investment into the state, which have been mostly very successful, and there's a few that have been less successful, and I'll point those out. But we're innovative, we're competitive, and we're all here, you know, to keep it that way. Because Georgia has an expansive tax system and is multi-jurisdictional in many ways, that's been a good thing for, obviously, the state's bond rating and keeping sources of revenue from somewhat sheltered from changes in the economies and whatnot. And I don't think anybody wants to change that, and the proposals that I've thought through don't really do that. I think that the system in total is very, very good, and where it needs to be improved is down in the details probably. However, I'm appreciative of the fact we've gotten rid of a few, in my opinion, nuisance taxes recently, like the intangibles tax and perhaps the estate tax, estate tax, if you look at it that way. Those have been things to get us off the list of all the taxes that we have. Georgia has or every tax system has a measurement process, and we're either going to measure the value of property on a direct tax basis, or we're going to measure income somewhat on an indirect basis. But it involves a valuation process, and it involves a definition, and it involves judgment and interpretation. And I think, at least the Georgia Society of CPAs, we're all about simplicity, advocacy, making the system fair to everybody and consistent. And I think that's what the Department of Revenue wants, and I know the legislature wants as well. Having said all that, I think some of the definitions in the details is what we need to look at in evaluating really what each tax type is all about and which ones work the best and which ones don't. And again, my focus is really on the business personal property tax, income tax, and a little less on real estate and sales tax, but I'll try to touch on each of those. On the business personal property tax, this is one of the things that business owners will come to a CPA and ask them to do, because it looks like a balance sheet, sort of, and so you got to go back and accumulate your fixed assets that are used in your business and accumulate information about your inventories. You know, I think this is, even though the southern states, you know, do this greatly, and the northern states do it lessly, I think it's a good tax. I think it's easy to administer. Of all the things I just named, it's probably the easiest system because it's based on a cost, historical cost basis, and hopefully we have information to easily accumulate that. The biggest problem with it, which I heard earlier from the county commissioner in Rockdale County, is that we don't have, and oftentimes we don't have a statewide definition of how the rules should apply. And some of those statewide definitions, I think, need to happen as far as how property is classified, whether or not, for example, certain types of fixed assets are Category 1 or Category 2. I think the state could do a better job of explaining what those categories are. And the biggest one probably is it's just some definitional law about real estate, you know, what realty really is and what personally really is, with the aim toward avoiding double taxation. Classic case is where you got a factory, and the factory's 5 years old, and the air conditioner unit goes out, and you know, you replace the air conditioner. And the question is, well, is that air conditioner unit, is it realty or personally, and do you put it on the personal property tax return knowing that the county tax assessor's office will likely assess the realty as an air-conditioned building, and you'll wind up with the potential for double tax and may not really see it or know it. That's a big issue. The other is leasehold improvements, which there's been a lot of court cases about defining that on a countywide basis, and there's still great confusion, I think, on what a leasehold improvement is, whether it's realty or personally, and who pays the tax on it, who the owner is, how it's administered. And there are a lot of rules on it, but I think they're not applied on a statewide basis, because in defense of the local municipalities and counties, there's a lot of interpretation, and there's a lot of differences as to what the rules are. So I think we could improve that, and I'm not sure who should be in the driver's seat, DOR or the legislature, to try to shore all that up, but I think it's a great move in the right direction. As we heard before, I think there's also diversity and confusion on the homestead rules just in general, and there are so many different types of homestead exemptions, which I don't profess to fully understand, but I know they're a good thing. I know that there's reasons and special interests behind all of them. What I would like to do is have perhaps the state take the lead in defining what those exemptions are, at least defining 3 or 4 categories of exemptions, and then letting the local governments perhaps pick and choose which ones they want. And obviously they set their own millage rates, so ultimately they have the final say. But I think that if we could kind of standardize or consistentize the definitions in that area, would be a huge improvement. With 159 counties, and I don't know how many municipalities we have. Real estate taxes are a huge source to the state, and it's also the easiest thing because it's a government-assessed process for the most part, and CPAs don't do anything until we get involved in the appeal process. And that's not all bad, and I would just encourage, again, the use of the Internet and local governments to make the information public. Some counties are behind others in doing that, but to the extent you can publish information or the tax rolls, et cetera, on the Internet with respect to real property, it would be very helpful, and I think it avoids the suspicion that the system could be inherently unfair or secretive or anything like that. So I think we're moving in the right direction. I don't know if the state can help standardize that process, which many counties are doing now. Another thing which may appear a surprise to you, but I would actually like to see Georgia mirror perhaps some of the license and occupancy taxes that are now in Ohio and Missouri and Oregon and Michigan, some of the Midwest states, as a way to subsidize local governments and maybe roll back other taxes. And the reason I say that is it kind of plays off the income tax laws. Not every one is the same, but many of these occupational taxes are on net profits. And to the extent that there are procedures in place to income tax laws and rules to define what net profits are, and to the extent there's apportionment rules out there to define what sales are in your area, I think it's fairly easy to capture that information. And if you have a Lowe's building store in a certain town, that's one way to kind of capture the information. So you take the company-wide profit and you apportion it back to the city. I think it's a progressive tax, and it to me is easier to be done at the CPA level or when someone's doing the income tax return, et cetera. Another suggestion I have is comment is on the registration process, and I may show my ignorance here, but the website that DOR has is outstanding. It's been huge changes in the last several years to make it easier to read and provide information and make it interactive as far as doing things online. And Secretary of State likewise has a website, and as I understand it, when you register a business for either a corporation or an LLC or something, you go through the Secretary of State's website basically and you get a number, a control number issued through the Secretary of State's office. My thought is, and I'm sure it's been thought of way before now, to share somehow, if that's legal, I don't know, that information with the Department of Revenue, so that that's the perhaps first point of capturing a new taxpayer that's tried to reserve a name or establish a corporation in the state into the tax system. The other first step, arguably, is when a business goes to get a local business license. And that process, regretfully, is usually requires somebody getting in their car and going to the courthouse or picking up a form and being very proactive. But some counties are better than others. I live in the city of Sandy Springs, and we don't have an interactive business license yet. You have to get in the car and go down to the city hall, which is understandable. But I think that process, maybe the state at the statewide level can come up with a system to help manage the business license registration process. And at the same time, the Secretary of State's office might be able to share their database with it. And I don't know if that's too far-reaching and out of bounds, but I'm trying to think out of the box here, and that was one thought I had. The other constant theme I have here is that I really would like to see standardization and kind of a push-down approach to our tax system in general. And I think that, again, Georgia's commended for being innovative and fair with their system, but I think we should continue to piggyback off the federal system. I think the 100-plus years of law that we have in our income tax system on the federal level is it may not be totally liked, but it's well established in most areas, and I think the state income tax system should further play off that. I think there's, year to year, I've been doing this for 25 years, there's been you can graph the difference between the federal and state tax base and how the laws add or subtract adjustments to federal income. But I think that, we got closer, and then we get a little further, and we get a little closer, and I would like to see there be a closer trend on a regular basis. And again, that's because business owners want certainty and clarity and what the law is all about. And if you're a multi-state business, it's very frustrating and difficult to understand the differences in other states. And I think Georgia can take the lead in trying to narrow that gap. I had a couple of income-specific items, and again, my comments might be directed toward regulatory fixes as opposed to legislative fixes, but nevertheless, I'll throw this out. There should be greater conformity, in my opinion, with for example, the payroll tax reporting and how withholding tax statements for both employees and for non-resident members in pass-through entities, how that's handled. And I don't have the solution to that, but I think that Georgia needs some money. There's no secret there that the Department of Revenue needs money to modernize their computer system to make that happen. And I think that's in the world we live in now. It's no secret that alternative minimum tax and things like that wouldn't exist without computers. And if we don't have the abilities here in our state to use those computers to capture basic information, like Georgia withholding tax, it's shame on us. I know we're going that direction. I've heard Commissioner Graham say that, and I've seen it, and I know it's happening. I think the state needs to support the department to make that happen faster. There's also a disconnect with the state and the feds on how we do estimated taxes. And again, that doesn't hit the majority of the population maybe, but the middle or higher income people have different rules for paying their state estimates than they do for federal estimates, and I think it's confusing. There may be reasons in the history of the law as to why they're a little bit different, but they are. And most people again want certainty and clarity. They like to have a look back and pay 100% of what last year's tax was as an exception, and know that they're good for the year. They don't have to sit there and compute their income every quarter and go through some of the other things that are out there. And I'll be glad to go into detail about that if the committee is interested. I think the forms probably could help a long way in correcting what I just said. Also with automation, and again, I commend the state for their e-file process as it is now. And I'm sure the department will be talking about that this afternoon. They should, because they ought to be proud of how many people are doing it. And it's making life a lot easier. And I would, as a business practitioner, really, really want to see corporate returns e-filed. And my software provider is struggling and hoping and wishing that communication will happen so that in 2006 we can do that. I hope we can. I think that just enhances compliance and processing. There's a few things, again, that Georgia should spend a little money doing, and that is on the e-file topic in general. If you e-file a federal return, you have a choice whether you e-file with an attachment or without an attachment. And if you have to have attachments, which people do because they're making certain statements to go with their return, or they're providing information, or attaching a brokerage statement to show their gains and losses or whatever, the feds have a way to do that. It's a different form, and what you do is you e-file your return, and then you paper mail the attachments 3 days later. And Georgia has no mechanism to do that. And I know that technology is always moving, and ultimately the feds and Georgia will be able to e-file contemporaneously the attachments. But right now it's creating a real disconnect with Georgia's instructions that require attachments and the fact that we can't really do that when we e-file. So small picky point there. I apologize. Lastly, in my wish list, I'll just point out to the group that the credits that Georgia has a number of business credits in the law, and they're all I'm sure well-founded and well-based, and I don't know the history behind all of them, but ultimately they're trying to encourage investment or employment in Georgia, all good things. And also commend the state for changing their single-factor apportionment in the last couple of years. The law actually rolls out in next year, in 2007, I believe, is when it starts going toward the single-factor apportionment. That obviously had a cost to that, and it cost the businesses that already located to Georgia and were in some ways enticed to locate here because they were promised business tax credits for new equipment and new employment or new plant. And of course there's a 5-year carryover rules, all kind of rules that limit the use of the credit. But when we went to a single factor apportionment, all of a sudden the credit became discounted in theory as much as 7%, because you had a dollar for dollar credit that you could use, and now all of a sudden your Georgia income has been potentially reduced by a third because of the apportionment changes. And now your credit, even though it's still out there, it may fade, go away before the 5-year period is up. And I've heard some feedback by businesses that are not going to move out, but there's always a backlash to everything out there. And I just caution the legislatures that that's somewhat of a bone of contention, I think, with making Georgia competitive. There's also discussion in the business community about other states, allowing for the sale of credits before they expire. And I don't know if this is a good thing or not. It doesn't sound particularly good to me, but certain states allow before these credits expire, and if you have no way to use your credits, to actually sell them to another taxpayer. And I think Georgia probably has already looked at that, but I think we need to maybe relook at that. And then lastly, I just asked that as part of this standardization process, both on the income tax and payroll and elsewhere, that particularly in the area of sales tax, that we look toward the streamlined sales tax initiative and look hard at what's going on there, because I think that's one of the biggest areas for revenue gains in the state that could be. And if we can standardize the rules a little bit, I'm not a proponent necessarily of Neil Bortz or anybody else going that far, but it's all about clarity, comfort, consistency, and equity in the system. Chairman, I think that's the end of my comments.
Well, thank you. Any questions for Mr. Dixon?
Sir. Yeah, I would like for you to. I didn't get it when you said it, and it's my fault, not yours. About the estimates, what's the difference between state and Fed?
Well, there's a couple of differences, and part of it might be fixed in the forms, but I'll give you an example. I hate to bore the audience with a lot of tax things, but if you have a multi-state taxpayer and he has credits in other states for the fact he's having to file a Kentucky or Tennessee or New York return, the starting point for the look-back method, which is a safe basis. If you're, for example, if your 2005 liability was $10,000, the general federal rule is you pay 1/4 of that $10,000 throughout the year, and even if your 2006 income goes up a lot, and you pay the balance on April 15th of 2006, you're not going to be charged another payment penalty as long as you paid last year's tax on a level, straight basis. The starting point for that under the Georgia rule is, at least in the instructions and in the regulation and the law, as I understand it, is, or rather the law says it's the prior year tax, whereas the forms indicate it's before the credits. In other words, they're not looking at the actual credits and calculating the safe amount, and it's causing underpayment penalties for a lot of clients that, my last year's tax after all these state credits is only $8,000, not $10,000, and the form doesn't really allow you to do that. It's going to charge you underpayment penalty based on the $10,000 and not the $8,000, and that's very different than the federal law. And I think the Georgia law is unclear in the area, but I think it's the instructions are clear because the form says it's before the credits. So there's a real disconnect there. And obviously the percentages are different too, Chairman O'Neill. They have, and that's okay. I mean, the feds have 110% of prior year, and Georgia has 100% of prior year based on income, et cetera. But I think standardization in that area is very important.
One more question. In your practice from your side of things, as you look at it, do you have any suggestions for us that deal with collectability of legitimately owed taxes, things that you think that you've seen maybe that could be done better, either legislatively or through the department, or at the local levels to help the local governments collect those taxes which are legitimately owed? The statement was made early in the inception of this committee that prior to this last recession we went through, we had over $1 billion of uncollected, yet legitimately owed taxes, which would have certainly allowed us to almost make no draconian revenue cuts. We've just been collected what was owed. Your experience as a practitioner, do you see areas that we're constantly or over and over defrauded, that there might be some safeguards or something that could be put in the law that would help us better collect legitimately owed taxes, so that the ones that play by the rules maybe could pay less? That's one of the missions of this committee, is to try to, can you give us any suggestions in that regard?
Well, I appreciate the question, and I know that's why we're really here. I think that compliance, part of it is education in the process. I would like to think that taxpayers that use CPAs are using people of the highest and most educated abilities and are doing the right thing. But I think there's a couple of tax gaps that, this is my personal opinion, that need to be plugged. And I'm not saying it's worse than what it was in the past. I think the gap actually has, this is my opinion, has narrowed. But the two big areas we mentioned at lunch today was actually the self-employed individual taxpayer that may not be on the rolls, or that may not be knowledgeable, or may have bad advice, or whatever reason. That's one big gap, no doubt about it. And the other big gap, I think, is internet, interstate sales. Those are the two biggest gaps. And I think the interstate internet sales gap could be or should be enforced through the employer or seller's side. I mean, I think, in fact, most taxes, to the extent they can, in my opinion, be withheld at the source or have the employer withhold those taxes, is the best fix in every case. That's a little harder to do on the self-employed person, and I don't have a suggestion today to necessarily fix that. But I think in modeling any system, I'm in favor of. I know this is, I guess, pro-government, but I think, again, with computers and technology today, I think to the extent you can capture income at the withholding agent, whoever that might be, is the best answer. And you got to have the facilities to cross-check the withholding agent to what's ultimately filed, if you require a filing at all. To me, that's the answer. And I don't think, again, in this world that we live in now, that people are necessarily afraid of that. I mean, we know now you file returns on the computer. You do online banking. There's so much of that we still have to allow paper, because not everybody can have access to computers. I understand that, but I think the vast majority do now, and that's the direction I would encourage.
Can I ask you one on the, say, a non-compliance? I don't know if you run into much taxpayer. They're 3, 4, 5, or 6 years behind. Would it be easier for them to get on the tax rolls if we could be a little bit more forgiving? I mean, if somebody's 5 or 6 years behind, they can't even begin to get started usually. I think we ought to have any kind of amnesty type thing, or at least once, or anything to motivate them.
Well, amnesty can be a dirty word, I know, depending on who says it, or it's a good word. And
we got a responsibility.
There's a lot of programs out there, and a lot of states have done that. We've done that, and they call it different things and do it at different times. And I think, in a broader perspective, you can look at the immigration laws that are being thrown around, whether amnesty is right or wrong. But the ultimate objective is get people on the rolls and get compliance. And I think that, at least in my practice, when we come forward to the department and say we have a non-filer, they have been responsive to getting them on the rolls and being lenient, perhaps, on some of the penalties they could otherwise charge. I don't know how I think you throw that out there at the same time you come down on the compliance and enforcement side. I think they can go hand in hand. If you do this, and it's been done before, but I think it's part of the education process. You just keep doing that.
Right. Any other questions?
If I could follow up, just brief. I know I'm probably asking too many. I've had several people, question me or inquire, I guess, of me about the state income tax calculation method versus the federal one. Do you care to offer an opinion on where you start? After you have your number on your federal return, and then you go from there. I mean, that's something that has been created through statute in Georgia over the years. Not the Revenue Department's fault, not necessarily any individual's fault, but would it? Do you care to offer an opinion on trying to simplify that to better match the federal form? Without regard to revenue neutrality, I think that's something we want to try to do. But what would that save in time and dollars to the average taxpayer in Georgia?
Good question.
Opinion on that?
Well, I do, and I think from a business point of view, hopefully I made it clear that I think that I want to narrow the gap. Mm-hmm. And Georgia does have a conformity posture, and we attempt to conform with federal as soon as the laws come out. Sometimes there's a 1 or 2 year gap, and sometimes it's a permanent gap. But my recommendation is that for business income that we narrow the gap, that there not be differences. If we have to change the revenue a little bit by adjusting the rate, that's my opinion. Maybe we do that. For individuals, I would have a slightly different answer. I think that Georgia has to take care of its elderly and special disadvantaged people, and I think a lot of those adjustments are entirely appropriate, and they're fairly easy to understand, and arguably deductions and exemptions are easier to understand than credits, because credits are hard to calculate. I mean, they sound good, but in my humble opinion, I think those exemptions we have for retirement income is well worth it, and it's not a problem. It's not an issue. Perhaps DOR could do a better job, maybe, of matching up birth dates and making sure it's properly enforced. But good question.
Any other questions? And we thank you for taking your time and sharing with us.
My pleasure. Thank you.
Thank you. Our next presenter is Dr. Wes Clark, Associate Director of Research and Policy at the Carl Vinson Institute of Government at the University of Georgia. Dr. Clark.
I think I have a PowerPoint. Okay. You have Thank you, Representative Tumlin and Chairman O'Neill, for the opportunity, and I'd like to thank Senator Hill and Senator Harp as well for the opportunity to address you this morning or this afternoon. My name is Wes Clark. I'm the Director of Research and Policy Analysis at the Institute of Government at the University. And I'm going to talk generally about revenue collectability. A lot of the people who have already spoken have talked about particular problems with revenue systems or particular sources of revenue. They talked about getting the revenue to the correct unit of government or similar problems. I'm going to talk a little bit about collectability generally, and what we see as researchers are issues of collectability. Local governments in Georgia, as elsewhere, rely primarily on taxes of various sorts, current charges for services, licenses and permits, and intergovernmental revenue coming from the state and federal governments. Local governments have generally relied heavily on the local property tax due to tradition, but also due to its stability and the amount of revenue it can generate, since such a large part of the wealth of a jurisdiction is in land and improvements. The general sales tax is historically a state revenue source, but nationally it accounts for about 4% of local government total revenue. Here in Georgia, it makes up about 20% of county revenue and about 9% of municipal revenue. Attached to your handout, the last 2 pages, which I don't have on overheads, give some statistics. It's the 2004 averages for various revenue sources for Georgia counties and Georgia cities. These data came from our Tax and Expenditure Data Center at the Institute of Government. The data were provided by DCA. Selective sales taxes in Georgia account for 1.1% and 2.6% of county and municipal revenue, respectively. The motor vehicle tax is about 3.4% of county revenue. The income or payroll tax used in some states is a minor revenue instrument at the local level, but it has received increased significance as some central cities have sought to replace lost tax base. Current charges are generally sorted into three main categories: licenses and fees, user charges, and charges associated with monopolistic activities. A license is purchased to permit the user or the holder to engage in an activity that's otherwise prohibited, such as operating a motor vehicle, hunting, or fishing. The user does not receive a specific government-provided service, although the activity is often made possible or more beneficial through government programs that are sometimes funded with the revenue from these sources. Local governments nationally began to rely more heavily on user charges in the last quarter of the 20th century when tax protests led to the revolts that we're all familiar with beginning about 1978. Most of the difficulties stemmed either from poorly designed or implemented property assessment programs or from rapidly rising market values in some places. In any case, government turned to user charges to replace lost revenue. User charges have a number of benefits that help local governments operate more efficiently and equitably. The services funded with user charges must have two characteristics. They must have benefit separability. That is, we must be able to show that the user alone receives the benefit. And second, the service must have some means to attach a fee to it. Some mechanism for calculating an appropriate fee must suggest itself from looking at the service. User charges help local governments gauge demand for services by forcing the market to arrive at an equilibrium price based on supply and demand. This may ultimately allow jurisdictions to provide a greater array of services. The problem with user charges is that there is a trade-off between this efficiency and equity. Greater production of some services, such as library book lending or youth sports programs, is desirable. Placing a fee that recovers the full cost of the service may cause these services to be produced at less than optimal levels. However, one could also argue that lower income residents who do not use the service benefit when the full cost is recovered through a user charge. The issue is to determine the proper mix of goods and services offered and where we should apply fees. We should note here that inequality and inequity are two separate concepts and often are unrelated. Inequality is a mathematical concept. It can be measured, whereas an inequity is a philosophical issue and has to be dealt with in the policy arena. Again, the two are not synonymous. And finally, utility fees and franchise fees associated with monopolistic activities that are highly regulated. The collection mechanisms used for these services make it difficult to avoid payment. Intergovernmental revenue collectability depends largely on the capacity for grant writing and knowledge of grant programs that are available. Some, such as the Community Development Block Grant, are fairly straightforward and simple. Others are much more complex and require tremendous skill and effort in applying for those federal monies. If you look at the statistics, the operating budgets of Georgia's cities and counties, intergovernmental revenue makes up a very small portion. We're not including the pass-through money that comes in, but that goes directly to the operating budgets is fairly small. And there's a great variation across Georgia's cities and counties, so it may be useful to look at this area for collectability. There are two major components of collectability. That is collection costs, which is made up of compliance costs and administrative costs. And then the other components are avoidance and evasion. For most taxes, collection costs are largely borne by the taxpayer or the business that remits the tax. The sales tax, taxes on utilities, and franchise taxes are determined by the taxpayer or remitter according to state law or local ordinance. When calculation is simpler, compliance generally improves, and we've heard that already this morning. Administrative costs for these kinds of taxes, that is the cost borne by the government, are generally in the area of compliance monitoring or some type of auditing for enforcement. And mentioned already, the quickest way for audit compliance is to computer match business licenses with tax remittance, and also to check for trends so that the report will provide exceptions to general trends for individual taxpayers. Administrative costs are greatest for the property taxes that require the government either to prepare a tax digest for real and personal property or to maintain records of tax owed, as in the case of the motor vehicle tax. Compliance costs for the property tax are generally low for the taxpayer. In some cases where the mortgage uses an escrow, the compliance costs are really non-existent. Again, a simpler tax code will generally result in greater compliance. Looking at studies that have been done of the administrative costs, and these are just the administrative costs as a percent of revenue for various income sources, we see that administrative costs vary from about 0.3 or 0.4% up to about 2%. The estimates that you see here for motor fuel tax include the cost of checking the accuracy of pumps at the service stations, convenience stores, and elsewhere. And these are based on a number of state studies. I can't tell you if Georgia was included in any of those particular groups, but a number of studies have come up with these averages or ranges. One study of income tax collection, and I point this out simply because of someone, Mr. Dixon said that most people want to pay their taxes, want to do the right thing. And in fact, in this study, this was a study of income tax collections in New Jersey. In 1979, voluntary compliance resulted in 97.23% of the tax collected. The study did not report the amount of the proportion of the tax owed that was collected or an estimate. But you see these other activities, field office audits, special action enforcements, and so forth, produced a relatively small amount of additional revenue. And notice here that we're not talking about the cost of conducting these special activities, but the amount of additional revenue that those produce. The estimates of $1 spent results in $8 collected that we heard earlier from Mr. Moon, or even the $1.75 for $1 is significant. But we are talking about a very small proportion of the revenue that's collected. The collection cost for current charges is almost entirely administrative. The government must design and implement the system to produce the revenue. In the case of utilities, meter reading and bill preparation make up a significant portion of these costs. In others, such as registration fees, hunting and fishing licenses, etc., motor vehicle registration, the cost to deliver the license and collect the fee may be very small or it may be quite large. It may be only a portion of the duties of a particular employee, or it may require a significant staff. In any case, the cost of processing payments and making bank deposits in this case must be considered, because you're collecting revenue $10, $15, $20, $40 at a time. Tax avoidance and evasion is an issue at all levels of government. For local governments, taxes are relatively difficult to avoid, with the exception of the sales tax. Avoidance by making purchases through the internet, through mail order, and we've already heard that discussed here today, and I think that will be an issue for a number of years to come. A number of states have joined these consortiums, and from an equity standpoint, equity for retailers who collect the sales tax versus internet and mail order sellers who don't, and even variation across internet and mail order sellers. Some collect and some don't. Avoidance of current charges is relatively difficult. It's fairly simple to exclude persons from the service without payment of the fee. Tax evasion is more of a problem for income taxes at the state and federal levels than for the taxes collected by local governments. However, while it is difficult to hide property, it may be hard to keep assessors unaware of improvements made to the property. The issue here is consistency in the enforcement of the building permit system and implementing a proper assessment program for reevaluation on a periodic basis. Evasion of the general sales tax collected at the point of sale is difficult if we have proper reasonable audit mechanisms in place, and we've already heard requests today for additional audit, and I would second that. The evasion of licenses and permits varies a great deal. Residents may engage in activities that require a license until such time as they are caught and fined, which means that enforcement is the only means to increase the collectability or the collection rates of these forms of revenue. User charges are more difficult, as noted earlier, with regard to avoidance. The same is true for evasion. The excludability of user charges makes avoidance or evasion very difficult. To summarize, the collectability of any revenue source is determined by the cost to collect and the ease with which payment can be avoided or evaded. For local governments, the move toward greater reliance on user charges and less reliance on the property tax has likely meant no real change in administrative costs, an increase in the variety of services offered by local governments, and mixed results in the trade-off between efficiency and equity. And I will conclude my comments and be glad to respond to questions.
Wes, the last remark you made, you talked about the fact that the shifting of charge for services from property taxes. Is it not true, though, that most of your municipalities and a lot of your county governments really have no alternative because of the political ramifications of property tax increases are so onerous versus the idea it's much easier to raise the fee for collecting garbage or water or whatever else?
Yeah. Well, a couple of things about that, and if you look at Georgia's the property taxes for counties and cities here in Georgia, and I know that Manager Bruton said that Marietta's property tax was going down as a percent. It was down under 14% of the city's operating budget. If you look at Georgia's property taxes from about 1985 to 2004, for cities it has varied quite a bit, from about 13% up to about 17 or 18% as an average over those 20 or so years. For counties, it's been very stable at about 40% as an average. So the cities are using the property tax as it's traditionally been used, as a balancing mechanism. So we do see fluctuation in that property tax. For user charges, we did have a period of time beginning about 1978 where cities and counties were very quick to implement additional user charges. Now, the administrative costs may not have gone up for implementing those, for collecting that additional revenue. During that period of time, I was in the lumber business, and I had more than one builder, contractor, complain about, they used to charge me $50 or $75 for a building permit. Now I go in and they want $75 for the building permit, and they're going to charge me $20 for the foundation inspection, the framing, the electrical, plumbing, and the final inspection. So now it's another $100. So we didn't add an administrative cost to collecting that. We simply collected more and for more different things, and we detailed it in that case. I'm not sure if that responds to your question, but I think if we want to keep property taxes low, going to user charges, and again, I would point out that user charges should be viewed from both an inequality and an equity, from an equality and an equity standpoint. Yes.
Do you know of any studies, or have you all at the Institute done any studies on timing issues as far as assurance of collectability of taxes. You know, for instance, what I'm asking about is, in a wage situation, you collect the withholding instantaneous, contemporaneously with payment of wage. Estimated taxes, we give people 90 days or more, depending on the federal rules. But more importantly, in fiduciary taxes, like our businesses that collect sales tax for us,
Right.
that we pay a fee. Have we looked at the efficacy of maybe weekly or daily deposits of those fiduciary accounts, where they're not used as working capital and so forth in business? Those kind of things. Do we have any statistical basis for what benefit or detriment it might be to us, or cost of compliance? To balance that again?
Of course, time is money, and so the quicker we get that, I know that a number of states have implemented in the last 10 to 15 years more rapid deposit through the use of electronic funds transfer, more rapid deposit of funds for the sales tax and other collections that are made on behalf of government. I can't point to any particular studies that look at whether or not that faster remittance has resulted in greater compliance, but it's an interesting question. I think one worth looking at.
Dr. Clark, could I ask, on your chart we had collection costs, we had 97.23 was compliance, but part of that would be greatly augmented by the threat of an audit.
I'm sorry, excuse me?
You had voluntary compliance was 97.23%.
Right.
A lot of that is greatly augmented by the threat of an audit.
Oh, right. The threat of an audit is yes.
And I I hate to admit I have casual reading in tax matters, but I've always understood that 89 to 92% of people comply with taxation in the federal government. Are there any statistics for Georgia or for income tax or sales tax? How much the big universe is and how much is actually collected?
I know that in most cases we see collection rates for the property tax 95, 97, 98% are not uncommon. For the sales tax, I don't have any numbers on the top of my head. My colleagues from Georgia State, from the Fiscal Policy Center, may have some studies, but I'm not aware of one that's been done in Georgia of that.
I was talking even beyond collection, just plain, not even filed sales tax and not even filed Georgia income tax. I guess the federal is 90, 92%. It would be hard to surmise that same ratio might be for states.
Since the state income taxes are piggybacked on the federal, I would imagine that the compliance rates are very similar. But I understand what you're saying about the threat of an audit. My dad kept a paddle on top of the refrigerator, so it works when we get older too.
Any other questions for Dr. Clark? Well, thank you very much for sharing with us.
Thank you.
Now, today I'd like to hear from Commissioner Bart Graham. He's been much aligned and played today. Bull-eyed.
Not outlined.
It's equal time.
Will the commissioner yield the question?
Go quick. It's not been any worse than I usually get from your chairman, so it's okay. Thank you for having us today. For those of you who don't know, we have some people from the department with us as well. Ed Maney, who's our Deputy Commissioner for Tax Compliance, Frank O'Connell, who's with the Policy Group, and Mac Chandler, who is with our Government Affairs efforts. What I thought I would comment first, based on previous conversation, was some of our current practices, some of the things we have on our agenda that we're implementing, and then some needed tools and some of those things that are most effective in what we do in compliance. I think most of you have heard some reporting on our revenue collection initiative that was started a little over 28 months ago when we determined that we had $1.6 billion under lien that was not being pursued in the department. We've collected roughly $240 to $250 million of that money. Those programs involve the alcohol licensing initiative, the Treasury offset program with the IRS, the work we do with private collection agencies, a call center that we have. It's a one last chance for people to avoid going through the private collection agencies. That's been very effective. The internet listing of our collection efforts on our website is effective. The general income tax delinquency program, and then tax incentive examinations, which is just it was phase 4 of our 4-phase initiative, and that's just underway, where we're doing more scrutiny of what people are claiming on their incentives. I'm going to jump ahead to a degree and talk a little bit about the alcohol licensing program and how that can be an effective tool. When I first came to the department, because we kept having recurring instances of default or failure to pay by certain license holders, I finally asked the question, how many or what percentage of license holders were getting a new license every year with a delinquent tax obligation? And it was roughly 17% of all license holders were getting new licenses. And so in that 1 6-week period in the 2003 to 2004 transition, we held the licenses until they paid up. And over $11 million came in 6 weeks' time that we didn't have to chase down. Now, the administrative process that would collect each one of those one at a time would have easily taken us 9 months to a year to do that. It's very effective. The industry has been very good to work with us. The wholesalers have been very good in that process because they knew that we were going to hold them accountable too if they delivered outside their regulation. So one thing that we would like to see, I think would be helpful, is to expand that platform, if you so desire, to other business licenses. That you couldn't renew your business license, for whether it be a business license or an individual practitioner's license, from 1 year to the next, unless you pass a tax check along the way. And you'll still have some evasion and non-compliance where people just get aggressive on the return, but at least they'll file. And once they file, and they file a fraudulent document, that's far more egregious than not filing at all. We find that in every major group that we've looked at, and I commented on this in an earlier committee, that where we've looked at it, we haven't pursued them all because we're trying to be equitable in our enforcement efforts, that it's not uncommon at all to have a greater than 10% non-filing rate in specific industry groups. And the ones we tend to look at are professional groups. They're not just random employees and employers. And every time we do that, it yields significant results. Another thing that would be helpful to us is you can register your business online with the Secretary of State, but often they will accept it with only a registered agent. We would like to propose legislation be enacted that requires that the Secretary of State can't take that registration unless the corporate officers' names are provided, so that we then can go after the corporate officers in successor liability cases falling onto that. I reported at a recent committee meeting that we had an exercise at the Savannah and Atlanta airport in which we ultimately got over $1.5 million from the same taxpayer who have 7 or 8 different business interests. But as you investigated each one of those business interests, 90% of them only listed a registered agent. So going to other corporate officers to help fulfill that obligation is far more difficult. That would be a simple process installing. And I'm happy to entertain things where we're forced to do things or we're forced not to accept certain things unless we perform too. So I'm not just suggesting we put more burden on the Secretary of State, but it's a pretty simple process that would add a great compliance tool for us. Another part of our job that's going to add a tremendous amount of help to us is our electronic transformation of the department. Taking sales tax returns and withholding tax returns online along with the payment simultaneously will speed our enforcement and compliance efforts. It would also allow us to distribute the sales tax money back to the counties more quickly. We just went live with the sales tax initiative that we had legislative authority to go forward with this year, and 1,500 taxpayers paid electronically and filed electronically. that money's already been matched up with the return, and they'll be eligible for the next distribution, rather than in the old practice it'd be another 45 days or the next month's distribution. The dilemma we have right now is only those taxpayers that have an obligation of $5,000 or more per tax payment period have to do it electronically. Now, we're offering it voluntarily to people. The state of Alabama's started at $2,500, and they've already dropped their mandatory filing requirement to $750 per payment period. And again, that 1,500 returns, obviously gets the big employers like Walmart and other big retailers, but we are sending out over 120,000 sales tax returns a month. Part of the way we're trying to improve our business too is 60% of those paper returns come back to us with errors that we're doing the error resolution on. By doing it electronically, the error will have to be reconciled with the taxpayer before it's ever submitted to the state. That way we can shift budget money from that effort on error resolution, which should be handled at the taxpayer level, to other enforcement efforts, whether they be new auditors or wherever else we put them. We continue to do a lot in education and guidance for taxpayers. We're clearly trying to instill within the department that this is not a gotcha operation. We can't allow people internally to get overzealous. We're fully committed and believe that there's plenty of tax revenue around to meet the budget philosophy that this administration and this General Assembly seems to have, with just greater compliance to those that we know aren't filing. And the amount of time and people it takes to pursue one and to get one to pay is great. The operation that I referred to at the Savannah Atlanta Airport, that took 30 people to go through that exercise. It yielded great results in a matter of 72 hours, but it still took 30 people. So we want to do more in that realm rather than squeeze an extra $10 or extra $100 out of somebody who's filing every year. And part of that is shifting the culture of the department so that we don't have people in our customer service area get overzealous with people and disqualify things where the documentation is otherwise available. Another initiative on the electronic transformation of the department that the General Assembly has been kind enough to help finance is what we refer to as our CTAB project. Some people think that that's just buying laptops for some of the tax agents and for the alcohol and tobacco agents. But what that project does, along with the software, is allow agents to go to the field, do compliance checks, and settle tax obligations with taxpayers while they're in the field. They can see real live data from the department while they're there. We first saw that when I was out with alcohol agents, and we'd go to do an enforcement, and the taxpayer would produce a return or a payment that we didn't have in our system. This way, though, if we go and find noncompliance, a citation can be created on the spot, a tax obligation can be paid and met in the field. That immediately gets downloaded into our base system, and that will stop other notices from going out if we have a backlog of work. And we are constantly with a backlog of work for as great as size as Georgia has grown to. The most effective programs we have are the Treasury Offset Program with the IRS, our internet listing, and the education and guidance that we do. We probably do 35 to 40 seminars around the state every year. They're generally very well attended. They're generally in industry specialization groups, so it's not something that people gravitate to or see a lot of publicity about, but they are well attended. One of the most effective compliance tools that we could get that some states have adopted are data warehouses, which are part of an integrated tax system that allows you to see the relationship management of a taxpayer, not just the company, but any related companies or corporate officers or commonality of boards of directors, where whenever you can put pressure on people, they generally will avoid a public disclosure of their problem. And most people that you deal with on a regular basis, and most of the evasion tends to be the result of individual action, not the company action. Somebody directed it, some officer was responsible for it or irresponsible for it, and when you put the pressure on them, they'll solve the problem if there's a way to get it. Our biggest evasion is in sales tax misappropriation, withholding tax misappropriation. Often it's due to lack of governance within the organization. Often it's due to, occasionally it's due to embezzlement or fraud. But in the past, there might have been some leniency on that if somebody came and claimed embezzlement. But our standard now is if there is not criminal or civil litigation to go with that, that it's not important enough for Georgia to give grace to that organization. It can't be because somebody's married to a deacon in the church or we're in the same Sunday school class. There has to be the litigation there that somebody's being pursued before we give the leniency. With respect to the data warehouse, the states that have implemented these type things, you can spend any amount of money. When I first came to the department, people were talking about an integrated tax system that could cost $250 million. There are other market-based systems that you can do that aren't customized to your state that are far less expensive than that. The data warehouse component itself has been estimated in Georgia would be a $20 to $22 million implementation with a 3-year return on investment of over $30 million. To some degree, we can collect that with just our cost of collection fee, allowing that money that we get every year to be dedicated to fund this project rather than that money going back into the state treasury. Some of the other things that were discussed earlier today and that are on our radar screen, additional auditors is always helpful. But regardless of what the diminishing financial return is, I think an industry standard might be anywhere from 1% to 3% of any particular group that you want to audit each year would be statistically significant, reasonable standard to audit. We're not interested in having enough auditors to squeeze as much money as we can get out of people. But we also have to have the positions to go with the money. Yes, as commented earlier, we have been appropriated some money in the last 2 years to add auditors. Those auditors have been added. They are generating significant results, and at the next House and Senate Joint Appropriations Committee meeting will report on some of those production numbers. But we haven't been given new positions in the department through the process. So what we've had to do is take positions out of other divisions within the department to fill those positions. That has cost us on the customer service side, but that's a decision we made that we felt was in the best interest of the state. The other things you can do is you can consider raising the minimum filing requirement. In the last year, we recommended we bring the out-of-state or non-resident filing requirement down to what the current in-state requirement was. But there is a certain amount of activity that goes on for little revenue. That's a consideration. I'm not necessarily a proponent of it. It's just mathematically you could reduce our cost of compliance and collection by doing that. We want to continue the electronic initiative, and any support you'll give us when we bring the ideas forward about what we're doing, why we're trying to do it, what level we want to set it at. We know that everybody doesn't have access to a computer, but I'm pretty convinced that any business that does $1 million a year in revenue has a PC that we could get hooked up. There has been some talk of point-of-sale access with retailers statewide. From a business standpoint and from a collection standpoint, that's a great concept, although I'm not necessarily a proponent that state government needs to see every transaction that every business does every day and who they're doing it with and how they're doing it. And that's one of the fallback problems, I think, if you went with a point-of-sale operation. I mentioned the corporate officers. Again, the difference is requiring the Secretary of State to not take the registration unless the officer's names are given with the Social Security numbers. It's kind of optional now. The business is required to have one when they incorporate, but they don't have to give it to the Secretary of State. Again, the tax checks on any type of business license, any type of professional group. We do it on state employees to get the license renewal. It's obviously a very effective tool. We can do it in an intrusive way. We can do it timely. One problem that we have with collectability is frivolous refund claims. There are practitioner groups that's what they specialize in, and it's very common that 95% of the refund claim will get rejected. Ed Maney's group in the last 18 months has rejected over $260 million worth of refund claims that are not in litigation because the taxpayer thinks they're right and we're wrong. If people think they can get away with it, they'll try to do it. It's the same reason why you have state troopers and police on the highway. You're not ever going to stop everybody from speeding, but if you're not ever out there, they're going to get fairly aggressive. One thing that would also be helpful is more enforcement power with respect to litigation and felony provisions. You passed one last year with respect to sales tax, and that will be very helpful to us. And again, we're not interested in trying to charge somebody with a felony who makes a mistake on their tax return, but you know it when you see it, when there's fraud and a consistent egregious activity. and we're only interested in prosecuting the worst of the worst. Like when we find in the tax preparer in Muskogee County has the Muskogee County School District school list with all the student Social Security numbers and all the parents and their Social Security numbers, and when the taxpayer walks out of the office, they change all the exemptions and deductions and then file the return electronically that night after the taxpayer's left. So the taxpayer thinks they've done the right thing. The tax preparer has not done the right thing, but our first point of collection is going to go back to the taxpayer. We have increased the initiative to go after those type of preparers. Some conversation was given earlier with respect to an amnesty program. I'm not a proponent of that. I think that's an excuse for us not doing the job that we should be doing within the department. If you give us the tool we need with respect to corporate officers and the Secretary of State or with business licenses, you'll affect the same result. We'll know who to look for and where to look for them. We're doing a lot more work now than we have historically at crossing W-2s. One thing, the Treasury Offset Program, the only thing it will do is if somebody files federally and they don't file state or give different information, we can solve that. But if they don't file either return, the only way to get to them is through some type of registration process or through crossing the W-2s, and we're doing a lot more work in that regard. And with respect to the amnesty, I'm not a proponent of that because I still think there are things that we can do to fairly and equitably enforce the tax laws without doing that, and you will have people hold out for the next amnesty. Some of you will know that there were some very visible people who had some tax compliance problems. 2 years ago, they paid us $120,000 between the two of them, and both their tax obligations, if I remember correctly, started at $4,500 or so and $6,000 or so. The rest of it was penalty and interest that accumulated over time. Now, my number might be off there, but it was on a magnitude of 5 to 6, 10 times greater than what their tax origin was, and they were just holding out for the next amnesty. And they're both habitual non-filers or slow filers. A lot of people have gone to where they've become so familiar with the process, they know how far they can hold us out until we can file a lien on them or garnish their wages. And so unless you're tracking them day in and day out and keeping the statute running and doing it timely, you're always going to fight that battle. So that's why more enforcement initiatives are helping the process. With respect to the insurance premium tax, this doesn't have anything to do with collectability other than to say that I think we have been fairly successful in showing our resolve in collecting what is owed by people in an equitable amount. I don't quite understand why that's in a different State Department, other than the fact that it's called insurance. I mean, the function is the collectability of it, and I'd be happy to entertain anybody's desire to move that to the Revenue Department. It would help in the financial reporting every month as well. And then there was some conversation on the motor fuel tax at the local level. The challenge of collecting the local portion of that is that everybody's retail price is different. You have to come up with some kind of average on that. I'm fine to do it. I'm fine to convert it to an excise tax. We did do a gas tax suspension at the state level back in September, so the state wouldn't have a one-time benefit from high prices. It would be very simple to convert it to an excess tax. Our cost of collection and compliance would go significantly down. And I'm also a proponent of moving to a tax at the rack, at the refinery level. Our database with gas distributors has 600 to 800 taxpayers in it, somewhere in that range. At what's referred to as the rack level or refinery level, we'd go from chasing 600 people or firms around a year to chasing 15 to 20 firms around per year. That obviously has a significant tax compliance cost reduction attached to it. Thank you for letting me be here. I'm happy to answer questions.
Martin, you have power to compromise when you have efficiencies such as the one you alluded to where they owe $4,500 to $6,000 penalties and interest rated up to $100 plus thousand. Can y'all compromise on the interest penalty?
The interest I can't. On the penalty I can. The interest requires some type of inaction or fault of the department to do that.
Could you not be better? Could you not increase revenue if you could compromise those kind of things? Would it help?
There was a time that it might have had a one-time effect, that would have been helpful. But I think in the last 24 months, we've worked through that time. If we're doing our job on a regular basis, there's not a need to do that. There is an offer and compromise program that mirrors what the IRS does, that we allow some people to participate in, but we don't allow people to make a business practice of just taking taxpayers through that process. There has to be some type of need, some type of hardship. There's now dual accountability and dual authorization that didn't exist in the past, so you could window shop to get through that process. The standard is if someone can't take care of themselves or solve their problem, or the state would be worse off, then we'll give them some latitude. But if somebody just wants to start over, but they're perfectly income producing and have the wherewithal to pay it, and they're still a member of the country club and still have a house in Lake Burton, it's just not happening. But we have people try to come through that program that
my question was, do you have the capacity to compromise that by law? I mean, is it something that you ought to have?
Yes. You
do have the capacity to do it. Y'all choose not to, I understand.
No, we don't choose not to. It's just we're just very selective in the way we do it.
Second thing I have, the data warehouse that you're alluding to, is this something you can do by regulation or something we need to legislate?
It would have to be funded.
Okay, so we have to appropriate.
It would have to be appropriated funded. Yeah, the other thing about some of these systems that have been proposed over the years is they require anywhere from a 3 to 5 year implementation period before you see real results from it. And I'm just not a proponent of doing something that's that customized, because then you have to maintain the technology staff that knows that system only. And that's part of the problem with our system today, is so many of those embedded software programs, the technology people aren't being trained in them and can't maintain their technical skills in it, so we have to pay more to get people familiar with it. The type of programs that we want are market-based, that other states are going to pay for the development cost of enhancements that we then can just roll back into ours. And that's what we're doing with our current online initiatives with withholding and sales. We're getting ready to roll out electronic renewals of IRP if the alcohol license renewal process will all be online and electronic. Yes, sir.
Mr. Chairman, 2 or 3 questions, Mr. Commissioner. We heard earlier, and I don't know if you were here, about the insurance premium taxes. And as I understand that, that's a tax that insurance companies pay in lieu of corporate taxes, and it has to do with the percentage of the actual premium charged to a Georgian. And there's a state component, I think it's 2.5% or 2.25%, and then the local governments get either 2.25% or 2.5% for a total of $475. Is that right?
I think that's correct. I'm not that familiar with that.
But it's collected at the state level, we're told, and distributed to the local level. I'm curious, are we collecting that from a compliance standpoint? Are we getting all that we should be getting? Is there ways, are there devices out there to avoid that? And the follow-up to that is that the local governments that testified earlier complainantly said it's 4 to 6 months before they get their cut from the time it's collected. And they wondered why there was such a long period of time, because it obviously cost them time and cost of money and budget money. Could you speak to any of those, or are you saying that since the department doesn't deal with those, you don't?
I can just tell you what little I know of it is it's 100% administered by the Department of Insurance. I do know that there have been some state auditor reports that have made supposition, if you will, I don't know what basis they made it, that they felt like there was probably money being left on the table through compliance by underreporting and underpaying. Some people have proposed converting that tax to just going back to a corporate income tax on the insurance companies, making it revenue neutral or a reduction, however, to make Georgia more competitive in that industry. The few conversations I've had with Commissioner Oxendine, he felt, and the feedback he got from the state auditor was, with greater technology, they could do an enhanced job at complying with that requirement, and there probably would be more revenue to be collected. I don't know what system they're using I just know that it's a similar function to what we do every day between motor vehicle and tax, and the economy of scale would be there for us to do it, and we'd be happy to.
One more, and I'll leave it alone. About the auditor, and maybe I just didn't hear you correctly. I know that you said that you didn't want to audit every single tax return or appear to be too overzealous or too hard-hearted for our citizens, and I certainly concur with you. But you do believe we still need more auditors? Is that right? But you also don't want to have other employees that are as important to the department displaced as a result of that. Is that a good summary of your?
Yes. I mean, because right now we have to go from certain areas of focus to others from one year to the next, and so there's certain parties in certain industries that will never see a state auditor, and that's not necessarily a good business practice either. There are also some industries that require you meet a minimum audit percentage as a standard in order to qualify for outside support, whether it be federal matching money or otherwise. And there it comes to mind is in motor fuel. If you don't, we've been written up in the past for not auditing a great enough percentage of the population in that area. So there's, on the average, an average auditor in their just normal work without getting overzealous and being properly managed will end up collecting anywhere from $1 million to $2 million a year, and larger in corporate environments or refund claim denial, that number can be multiple times that large. So we are far from a diminishing point of return on the effectiveness of auditors.
Are you going to come to us during budget deliberations with a number that gets us to that diminishing return level?
If I'm asked to, I will, and if the governor allows me to do so, I'll be happy to.
Thank you.
Mark, in discussing the insurance premium tax, that has been used as a negative. The level of Georgia's tax being out of line with a number of other states has been used as a reason that we do not become the location for corporate offices or head offices of insurance companies, and have in fact lost maybe one or two of ours, I'm not sure the number, to other states with a lower premium tax. I guess in thinking it through, maybe it was mentioned this morning what the basis is the local governments are receiving the premium tax. But do you know what the original basis was for that tax?
I've heard it, and Ed Maney might be able to tell us, but I don't recall. Ed, do you know? We'll get you a written response to that.
I mean, other than it's a service that's delivered based on that. Most of them have a fire department fee now they charge as well. I'm just curious. Yes, sir.
Just a quick question. We often get constituent calls about revenue. I get a few. I imagine. I had a constituent call and had a question about a refund. I think it was in the sales and use tax area, and they called about inquiring. Somebody had literally misplaced a deal. I don't know if they sent $5,000 to the 500 or 50,000 to the 5,000. They were told that if they initiated the process for a refund, it automatically triggered an audit. So be careful what they ask for. And you're telling me we're short of auditors, but you get something that simple. Is that our policy that if somebody asks for a refund, it automatically triggers an audit for something as simple as that?
Well, it depends on what people's definition of an audit is and what an auditor does, and it will get a review. It doesn't necessarily constitute a full-blown audit of the company per se, but it would depend on the situation, the circumstance, and the dollar magnitude. And they're filing an amended return. But if it's a significant dollar and the amount and the percentage of ones we end up rejecting and the dollar magnitude that we reject, it does warrant a greater share of our review process to go on the refund claim, because there are practitioner groups out there that's all they specialize in. It's just like on tax incentives. we find that more than 2/3 of those are taken on amended returns. So it really has nothing to do with the economic decision to locate in Georgia to begin with. That decision's been made. They came here, and if a practitioner group can come along and say, we can make you this kind of money because Georgia offers this, as I said before, it's like Paul O'Neill said when he was running Alcoa, if you're giving money away, I'll take it.
But again, it's not your policy that just when somebody inquires, they can show you exactly what happened on here, that's going to trigger. Because the way this person alluded that it had been represented to them, basically the guy, the individual on the phone, was trying to talk him out of fixing the error.
That's a management problem that we need to fix. Nobody should be told that. I mean, we do review more refund claims than I would like. I drive Mr. Maney crazy on that quite often, but every time it's the data is there to substantiate the need for doing that. But some of that is just the type of response and the way that response is given is not. That's a management problem to me.
You stated earlier about some back taxes that were owed, and there are a number of people in society that have got the system figured out in regards to how far to play it until their wages are garnished. Would you have a suggestion as to some penalty that could be put in place that might prevent that?
I think that people that are inclined to do that are going to continue to do it. I do think enforcement, where we can demonstrate that they are habitual and having more enforcement capability and capacity to prove that they have been egregious and repetitive, that we can take it to another level would be helpful. It's just like in the past, the fine for bouncing a check for an alcohol citation was $100. Didn't matter if it was a $50,000 check or a $100 check, and it never went up. So we rewrote all those regulations and guidelines so it's progressive penalty. But the fourth time you do it, the third time you do it, the license is getting suspended for some length of time, and the fourth time it's going to get suspended for so long the distributor is going to move the business somewhere else, keep from losing market share. That doesn't exist in the tax, in the general tax code. It's not progressive where we can demonstrate that. And somebody should, if they earn that right, should deserve a little cumulative treatment. And we can certainly bring back some suggested structures as to how that could be effective. I don't want something that can be overused or abused by different administration of the department from one generation to the next. And you should have the ability to start over at some point. But when you're taking through the department through it year in and year out, every return, then that's a waste of everybody's time, especially when those people are lecturing us on how to live our life every day.
What, do you have any handle on these habitual back tax? What's the number or percentage or amount?
Well, the ones we know about that are under lien is down from $1.6 billion to somewhere in the $700 million range, looking at a 12 to 14-year period of time. It's still owed, and we're still collecting it. It still amazes me how much money we collect from people that owed money from 1992, 3, 4, and 5. The program that we've done in the last year with the automobile transfers from out-of-state dealers has been a phenomenal success, and most of the counties have participated in that and done a great job with us as well. We had funding in the last year to get 9 contractors to help remove the $300,000 vehicle transfer backlog in our Rome operation. We've gone through 150,000 or so of those accounts now, and some of those transfers are 8 and 10 years old, and that group's collected over $12 million with 9 contractors. And that's what I could get everybody to settle on as contractors, so they wouldn't be permanent employees if they didn't prove successful. Well, they proved themselves successful for a number of years in just a year's time. I mean, and again, we can go down. You can come to the department, and I can take you through different sections of areas like sales tax and withholding tax, and show you one case after another. It's just massive.
One more question. Sure. Is there? If 9 are bringing this in, is there plans to increase that, or?
I'm sorry. Can you repeat the question?
Is there plans to increase that, maybe to? If 9 are bringing in this sort of back taxes that are owed, why would we not want to contract with somebody who's not a government employee, but sub it out with good oversight to bring in more.
Well, that's sort of what we asked for every year. I mean, that was a specifically identifiable group that we could tangibly quantify and put our hands on. Some people think that when we talk in these terms, that people are just past due by a few months, and we're just talking about what's actually delinquent and which actually has a lien on it. And we do use 4 private collection agencies to do a lot of this work, so our folks can focus on the corporate evasion more so than individual evasion. And so we're constantly in communication with the collection agencies not to let their staff get overzealous or violate any of the collection laws. And that's why you don't get any more complaints than you do on that activity, because if I don't get them, and I know you'd get them if those agencies were abusing, but they've got a pretty good deal going. That is just the dynamic, and my assessment is that when people start prioritizing needs, regardless of how effective and how much collection we can get and what it then can pay for, people quantify whether we've sustained our budget cuts like other state departments, and they level equity and fairness through state departments as opposed to what the resulting end product would be and what could be done with that end product. And that's beyond my policy input.
Mr. Commissioner, you mentioned earlier that when you tied the alcohol license renewals to the ability to check delinquent tax obligations, that pretty well cleared that up in a hurry for you. And you also talked about the ability to maybe do something like that with professional license groups. Are you able to do that now, or would it require legislation for you to be able to do that, or would it simply just be a budgetary process where you were given the funds to allow you to do that?
With respect to the alcohol license, just a point of clarity, it helps solve a current outstanding, but it is very effective every day, where people will show up with sacks with $20,000 cash in it. It's unbelievable sometimes what they'll do. So it's an ongoing tool that needs to be used forever. It would require legislation for what I'm talking about, that you couldn't renew certain types of licenses or permits unless you could demonstrate that you'd filed a tax return. And it'll be up to us then to determine if they filed the right return and if they're reporting the right amount of income. But I think most people who try to do the right thing year in and year out would welcome it and wouldn't have a problem with it.
Well, would that be something that you would be prepared to ask for, like in the coming session?
I'd be more than happy to suggest that idea. And again, it's a concerted effort with what legislation the department brings forward with the administration. But I think less controversial or potentially controversial would be getting the corporate officers through the Secretary of State's network. That should be uncontroversial across the board in my mind. The issue with respect to the business licenses is who's in and who's out. And if anybody's in, everybody should be in, and to have the determination to work through that exercise, whether or not you're going to include all professional groups or just vocations.
Well, I had two. I like compliance, and do we have any kind of, do we just piggyback off the government as far as 1099s and W-2s are concerned? Do we have any enforcement laws? If a Georgia employer is not giving out 1099s, do we just piggyback off the federal government?
Yes, as far as I know.
In the second, I see, and I have attorney-client privilege with a lot of our clients, but we have an aging population where there's more and more folks that have household employees and employees, excuse me. And it bears me a little bit that the federal government's easier to deal with. You file a 1048, and you just have, and that's very simple. And it's hard for a 70-year-old person to call the DOL and contact Department of Revenue and get the identification numbers and file a G6. Do we ever have, a 1048 is a very simple return. Pay your FICA taxes and your federal withholding. Do we ever have? I believe you get more compliance if you made it easier on the Georgia side.
We'll certainly put that in our list to review, but I think a comment was made earlier that by Mr. Dixon that we were checking. I'm not sure what thought we were checking on certain federal exemptions, but I'd like to think we're kicking returns out for special review and disallowing things or not. This state has just grown so much greater than the department is. In a lot of areas, we're just not that sophisticated. And because all the numbers that I'm giving to you and the lack of compliance, those are in known, identifiable situations in businesses. I'm not talking about what sometimes are referred to as the underground economy, like waiters, waitresses, anybody else with tip income, casual labor, day labor. I'm not quantifying that at all. When you see the federal reports on some $365 billion they think is being evaded, they are estimating what goes through that unidentified income. We're not using those numbers at all.
Any other questions for the Commissioner?
Commissioner, you alluded to the idea of suspending licenses. I'd very much like to see legislation offered that would suspend any professional license where there is a tax liability that has not been paid. And I think you'd get a lot of compliance out of our profession if we did that. I know we have an attorney in Columbus who just won't pay his taxes and runs for office. And I'd like to see his license suspended if he won't pay his taxes. I
can tell you we have chiefs of police around the state that have side businesses that don't file income tax returns on the business or individually. Yeah. A more practical way, I mean, that would be a very effective way to get there, rather than just the suspension that maybe what you're referring to, is not allowing them to renew it if it's an annual license. If it's once you're licensed, you're always licensed, then suspension would be it. But to get into the intra-year suspension or not, that would be a huge administrative inconvenience for a lot of people, not just the department but also the taxpayer. So a more middle ground way, but effective way to get there is on the renewal cycle, just to get it.
We have to renew our license every year, and somehow or another they keep renewing this guy's license for
It's a total disconnect.
Anything else? Commissioner Graham, thank you.
Thank you.
Our final presenter is the Director of the Fiscal Research Center at Georgia State University, Dr. Soquist. If you come forward, appreciate your patience.
I'm joined with my colleague, Jim Alm, who's going to do part of the presentation, but I'm going to begin. I've got PowerPoint, and you've got the slides in front of you. This afternoon, the concept of collectability took various forms, and you'll see the spelling also varied from each speaker to each speaker. The speakers this morning identified three things. They talked about specific compliance issues, such as the local sales tax on fuel, the use tax on remote sales, and they talked about enforcement kind of issues, particularly Commissioner Graham. We've also identified tax-based issues. For example, the voice over internet protocol, which is not subject to tax, and some people argue that it should be. And equity issues such as the distribution of franchise fees. And there's also discussion of tax administration issues, such as the deadline for filing property tax digest with the Commissioner. I'm going to talk mostly about the first of those, the compliance kind of issues and some administrative issues. And the three topics that we want to cover. One is discussion about the tax gap. And I want to talk about, Jim's going to talk about why it exists. He's done a lot of research and experiments on that issue. And then what can be done about it. The tax gap is simply the difference between what you would expect to collect from a full compliance tax collection less what you actually collect. So what should you collect if you got full compliance less what you actually collect? So what we want to know is how big is this problem? Okay? Is this something we really need to worry about? Is it $1,000 or $1 billion? Well, we don't really know. There's been no study of this in Georgia, but there's been some work that we can rely on. Minnesota's done a couple of studies looking at the sales tax gap. It's a fairly extensive report that they do, or study they do. They take audits, but they also take measures of the overall economy, try to factor all that in. And they estimate that this is in 2000, which was it's a recent study, but the number is kind of old, about $450 million in lost revenue, or about 14% of sales and use tax collections is missing. Much of that is from underreporting, and a lot of it is from non-reporting. So you get both misreporting and non-reporting. And it's projected to grow to about almost $700 million in 2007. Washington does a similar kind of exercise, but they rely only on audits, and so it's a much narrower focused research. But they also look at excise taxes. They estimate a much smaller gap, about $182 million, and only about 2.2% of the tax liability is not collected. So they estimate a much smaller gap. They point out, and both of these studies point out, is that there's higher non-compliance among newer firms and smaller firms. These are with sales and excise taxes. Commissioner Graham mentioned the IRS. Their last study, which is recently released, estimates that the federal government loses about $345 billion a year, a non-compliance rate of about 16% on their taxes. That includes the personal income tax, the corporate income tax, the payroll tax for Social Security, other excise taxes. So it's a fairly comprehensive study. They break it out, about $27 billion, or about, I think that's almost 8%, is from non-filing. $285 billion, or about 83%, most of it is from simply underreporting. Most of that is from the individual income tax. And then $33 billion is from underpayment. They also break it out by type of income source. And what they find is the largest amount of noncompliance is with the individual income tax is with business income. Wages, because they're subject to W-2, are reported, and there's very small noncompliance there, but it's the looser things in the tax code that gets avoided. And these are individuals, not necessarily firms. We did some comparison of federal returns to Georgia returns. We can get data from the federal government about income tax returns for Georgia residents. And we compare that with the number of returns filed by Georgia residents in the state of Georgia for the state income tax. And we lose about 7% of those returns. So there are about 7% fewer returns filed by Georgia residents for state taxes than there are Georgia residents filing for federal taxes. We also can't find about $3 billion in federal AGI on the state income. So that suggests that that's the sort of magnitude of the income tax problem in Georgia, from both non-reporting. This would be non-reporting in Georgia. The non-filing, non-reporting that the feds pick up is much of that is also applicable to Georgia. So this is just the non-filing part for Georgia. Now these are kind of crude, they're back of envelope estimates. We haven't done a real serious study. We also looked at sales tax per capita across states with similar sales tax rates and find that Georgia tends to have a much lower revenue per capita than other states. You can explain part of that by differences in the economy. Some states have more tourists. Some have different tax bases. They tax different things. We haven't investigated that, but it's suggestive that maybe Georgia's not collecting all the sales tax collected. The property tax, we can look at collections. So you compare what's collected on time relative to what's levied, what the tax bills that were out. And generally, counties collect anywhere between 94 to 98% of the tax levy within the due date. Ultimately, they probably collect 99% or more of that tax. Some of it gets lost because they actually do sell the house on the courthouse steps and they don't get enough money to cover the revenue, the lost revenue. but most of it that's imposed is collected. But that doesn't cover the kinds of things that might be avoided. For example, inappropriate homestead exemptions. We have no idea how frequently that's done. Whether someone gets a low-income elderly tax credit, their income goes up, and they continue, property tax credit, homestead exemptions, and then continues to receive that. Or they get a homestead exemption, and then they move and decide to get another homestead exemption in another county and rent the original one and continue to take the homestead exemption. We have no idea how frequently that occurs. Automobiles get registered in the wrong county. You see houses in my neighborhood with a tag, and I live in DeKalb, close to Fulton, and I see cars with Cobb County on the license plate. They're registered in Cobb County, but they're residing in Fulton and DeKalb. Fulton County, Virgil Moon talked about the loss in revenue in Cobb County. Well, in Fulton County, if you look at the numbers, they've actually had a decrease in the number of registered automobiles. Now, we are talking about Fulton County and their tax assessor's office, so that might explain part of it, but it's clearly not because of loss of population. So we're not sure what's going on, but maybe it's that they're registering elsewhere. And then there's misreporting of personal property. That's self-reported generally. I know of a study that was done in Wisconsin. They went out and did some severe auditing of larger companies out of state and came back and said they found lots and lots of missing personal property for Wisconsin. I tried to find a copy of this study, but I couldn't, so I can't tell you exactly how much of that is actually lost. But that's basically the story that we know of on the tax gap. Let me ask Jim to come up and talk about why this gap might exist.
Thank you, Chair O'Neill and Representative Tomlin. Thank you for the opportunity to discuss some ideas here. As someone who's not quite as centrally involved in the trenches and the front line of tax collection and compliance, like many of the presenters here, I think my perspective on these things is a little different. What I'd like to do is talk about some work that I and my colleagues at the Andrew Young School of Policy Studies and elsewhere have done that I think is relevant to why the tax gap exists and ultimately to what can be done about this. Let me start with some of the more obvious reasons for the existence of this tax gap, for the difference between revenue expected from full compliance and revenues that are actually collected. Listed up here, I think the part of the explanation is that people simply make errors, unintentional errors. In their bookkeeping, they also make errors because they don't fully understand the tax laws. And so part of the explanation is somewhat is unintentional and doesn't have the same connotation as evasion. Another part, probably the larger part, is that people cheat on their taxes. Some don't file tax returns at all. Many of those who do file returns misreport various items, either under-reporting income or over-reporting expenses and deductions. There are also instances, as we heard from Virgil Moon, among others, this morning, where firms that withhold taxes on income and payroll or on sales and excises, gasoline taxes, for example, do not remit these taxes to the authorities in any kind of timely way. This is a big issue in many of the countries where I've done work. Underlying all of this, I think, are weaknesses in tax administrations. Few audits, tax auditing systems that are outdated or underfunded or poorly targeted, even poor remittance procedures, even corruption and fraud among the tax authority, although I hesitate to raise that issue with the commissioner here. To focus more on some of these different aspects of these three basic reasons, let me now talk about some recent research evidence on this basic question of why do people pay taxes and why do they not pay taxes in some instances. This research has been done by economists, by social scientists, by tax administrators here in the United States. Dave's made some reference to it, around the world as well. And I think it has relevance to the issues that you're facing here in Georgia. A standard and obvious conclusion, first reason for people to pay taxes is the paddle sitting on top of the refrigerator that Wes made reference to. That enforcement is a central factor in people's decisions to pay taxes. This means that fear of detection is a powerful incentive for people to pay taxes. If they're afraid that their cheating will be detected, they're more likely to pay. And so the tax gap will be smaller. The evidence from empirical work on this, done by IRS, done by me and other colleagues in a variety of settings, is that typically a 10% increase in the audit rate, 10% increase in the audit rate, will increase reported income by 1 to 2%. So incentives matter, and incentives are affected by audit rates, although the payoff for extra audits is not perhaps as large as you might expect. There are other ways also, though, of increasing the fear of detection. Audits can be more selectively targeted to certain occupations and sectors where cheating has been found to be prevalent. Bart Graham talked about targeting certain occupations, and that's been shown to be effective in many places around the world. Source withholding reduces the opportunities for cheating. Wider use of third-party sources of information, these warehouses, data warehouses that Commissioner Graham talked about, I think also are useful. Information sharing between states and the IRS can increase the probability that cheating will be detected. Relative to or related to enforcement is the fear of punishment and the penalties that are associated with that. There hasn't been too much talked about so far today about penalties and increasing penalties, although Dan Ray talked about the fact that the interest penalties do not really bite until 6 to 7 months into the process, and he wanted that to be changed. Most monetary or financial penalties that are imposed in most all countries around the world, including the United States, are relatively small. Typically, penalties are back taxes plus interest penalties of 10% perhaps. These can accumulate over time, but it's not until you really get into fraudulent evasion and activities that penalties begin to increase. And even there, typical penalty on fraud in the United States, individual income tax, is about 75%, and that's only when it can be proved. The evidence from empirical work done by the IRS with their taxpayer compliance measurement program is that increases in penalties can also increase compliance, although again the payoff tends to be relatively small. 10% increase in the effective penalty rate. 10% increase in the effective penalty rate increases reported income by 1 to 2%, usually a little bit lower. So there is a payoff, but it's not a huge payoff. There are other ways by which punishment can be imposed other than simply financial penalties. Sending cheaters to prison. Think of Leona Helmsley and her prison sentence, I think was an effective deterrent. Even making the names of cheaters publicly known are also forms of punishment. Anecdotal evidence. A city in India outside of Mumbai was having trouble with people not paying their property taxes. And so what they did was they sent around drummers, big drums, who would sit outside these people's houses and just beat on these drums around the clock until people kind of gave in. I guess the analogy here would be to, and all apologies to any fans of this artist, Barry Manilow songs played outside people who are not paying their property taxes. There's also evidence that linking taxes paid with government services has shown to increase people's willingness to pay taxes. People don't like paying taxes, but if they can see that they're getting something for what they're paying, they are more likely to pay, and there's evidence that this is a fairly effective way of reducing the tax gap. There's evidence that people will pay more taxes the more they feel that government is responding to their wishes, again, getting something in exchange. And there's even some evidence that positive rewards to individuals who are audited and found to be compliant, outside of any penalties and such. Positive rewards, becoming eligible for a lottery, for example, with value-added tax around the world, has been an effective way of increasing compliance. There's also some evidence, and this gets at a variety of things that people have talked about, including Commissioner Graham, that providing better taxpayer services encourages people to pay taxes. Here we mean that tax administration basically makes it easier for individuals to pay their taxes, things such as websites, phone services, e-filing, treating basically the taxpayer more as a client rather than as a potential criminal. Think of Commissioner Graham's comments. We don't run a gotcha operation. And there's evidence in a variety of settings around the world that this increased compliance as well. Related to making it easier for individuals to pay taxes, there's some evidence that a simpler and more stable and more conforming tax code also encourages more compliance and so a smaller tax gap. Doing so will also reduce those unintentional errors that are a reason for the tax gap. Finally, economists are recognizing, with the help of other social scientists, especially psychologists, that although incentives matter, fear of detection, fear of punishment, linking services and so on with taxes, incentives matter, there are other more psychological factors as well. One of these is that there's evidence in many countries of what might be considered a social norm for paying taxes, a tax morale aspect. What's meant by this is that a social norm is a pattern of behavior that's judged in a similar way by others and that is sustained in part by social approval or disapproval. Most everybody here leaves a tip when they're leaving a restaurant. Why is that? If you're going to be in a restaurant where you're never going to go again, then why leave a tip? Well, there's a social norm of doing so. That's a pattern of behavior that everybody expects. Similarly, in the case of compliance, there's evidence that there is this social norm of compliance, that if you think everyone else is paying their taxes, you are more likely, not guaranteed, but more likely to pay your taxes as well. And conversely, if you think that there is a culture of cheating, a culture of evasion, if you think everybody else is getting away with cheating, then you don't want to be the sucker who pays your fair share of taxes, and you won't pay as well. This notion suggests that you will tend to comply as long as you think others are doing so, and you will tend to cheat if you think others are doing so as well. And there is some evidence that there are a variety of government policies that can affect this social norm. In that context, let me just mention a little work that's been done on tax amnesties, my own work on tax amnesties. The evidence that we have accumulated on that is that revenues typically fall after a tax amnesty. There are exceptions, revenues from regular collections. And this is most likely due to people expecting another amnesty in the future, as well as on their notion that past cheaters are being forgiven in some way, and they are therefore becoming suckers for paying their fair share. On the other hand, there is some evidence that revenues can increase after an amnesty if, big if that amnesty is associated with greater enforcement efforts. And so amnesties may then be a way to ease the transition to a new tax system that does have greater enforcement. This doesn't exhaust the list of things that researchers have looked at, but I think you get and for example, Wes Clark talked about different kinds of taxes, tax structure, for example, being harder or easier to collect. Property tax in particular being hard to evade, hard to avoid. There's evidence that if you lower tax rates, you reduce the incentives for people to cheat, and they will comply more. So there are other factors that can increase compliance and that can reduce the tax rate. All of this then leads into the idea, what can be done? And at this point, I'll play tag team with my colleague and let him finish up.
Given what Jim said, it's pretty obvious the kinds of things that we might want to recommend. Many of them have already been suggested by previous speakers, which is the problem of being the last speaker. Everyone has said what you wanted to say. But clearly, there are three different kinds of things you can do. One is to increase the threats, either increase the probability of being caught or the penalty if caught, improve service, or change the culture or the norm. Let me run through a number of things about threats. Some of these have been mentioned already. Increase the number of audits. Research that's been done on that suggests that for every dollar you spend on auditing, you generate maybe $3 to $4 in increased revenues. And clearly that goes down. The more audits you do, the more compliance you get, and therefore the less you're going to get from audits. You should also improve the quality of the audits and of the auditors. We know that on sales taxes, the biggest compliance problem is with new businesses and with smaller businesses. And it's because of ignorance of the tax law. At least that's a big part of it. So part of the audit process might be to educate the firm. So rather than trying to find out what happened or what's wrong, trying to find out why something is wrong, find out the cause. And so focus the audits on having a more educational attainment. Also, the quality of the audit depends upon the quality of the auditors, and the salary that's paid drives in part the auditor. Students coming out of accounting programs, they have lots of options, and if the state pays a lot less than the private sector, those people who can't get private sector jobs are those who wind up getting in the public sector jobs. You can increase penalties. Jim's already mentioned that. You can publicize the cyber version of it. You can do other things like withholding driver's license, withholding occupational licenses, and things like that. A lot of states are, and the federal government does this, is trying to use scoring to target the audits that you do. Rather than doing sort of random, you determine, well, who's the more likely candidates who are not reporting properly. We know where the bigger audit monies come from, and so you can go through a fairly sophisticated program to determine what's the likelihood that this taxpayer isn't appropriately complying. Jim mentioned to me earlier that there was a study that was Oregon that they looked at the results of the audits that were done by the audit department in Oregon and compared that to what they would have gotten if they simply followed the federal audits, which is done on a random basis, and they would have been better by just following the federal audits. They were not trying to target. Use other databases to identify audit targets. Who are the non-filers, for example? So you can go to driver's license data, occupational license data. If you could get Social Security numbers on property, you could determine who's got rental property and not reporting that. The state collects the unemployment insurance. It's an alternative record of employment, so you can determine if there's somebody who's employed but not reporting. You can allow third-party audits. Ohio does this. Rather than actually auditing, when you send a pre-audit letter to someone saying, you've been selected, lucky you, these are firms, the firm has the option of going and finding a third party to audit. That way they have some control over the audit, not the results of the audit, but the scheduling and the inconvenience that arises by having someone parked in your business trying to do an audit. You also allow audits to be done voluntarily prior to any letter from the Department of Revenue, so that they can go through and say, well, okay, we had someone audit our records and we didn't comply fully. We had some errors with our exemption certificates, and therefore we owe you X amount of money. And when they do that, the state doesn't charge them the penalty and interest, at least not the penalty. You can share information across states with multi-state firms, finding out who's engaged in certain kinds of tax shelters. Some places have actually gone and asked another Department of Revenue, for example, in North Carolina, to find out who the furniture manufacturers ship to out of state directly. So then find out that Jim Alm bought a $5,000 sofa, and we have no record of him paying use tax, and so we sent him a bill for the 7 or 8% on the furniture. You can do that sort of thing. You can do more than simply piggyback on the IRS reports, IRS audits. Clearly, that you ought to do that. You ought to, if the IRS audits and says you misreported, you have actually $10,000 more in income than you reported, and you owe the IRS so much. The state ought to follow up quickly with a letter saying, in that case, you owe us this much money. But as we said, there are non-filers that file federal but not state, and we ought to try to find those. Also, the IRS audit rate is pretty low. They don't audit very many people, and so the state might want to audit more than the feds do. Contract audits, Florida does that. A little controversial, but rather than hiring auditors, you can contract out to do audits. One suggestion was to disallow cash deductions. The federal government has done that for contributions to charities. You've got to have a letter from the charity. You have to have a canceled check. You can't use cash anymore. Cash payments are the easiest way to avoid taxes. Okay? Paying you pick up someone at the Walmart to come and do some yard work, and you pay them cash, and they never report it. You could require businesses, I'm not sure you do this for the individuals, but you could require businesses to not allow any exemptions or deductions for cash payments. They have to, if they're going to deduct a cost, it has to be paid by a check. Otherwise, they have to identify who it was and Social Security number of who they paid, the tax identification number. So you can determine that these firms were collecting cash, and you can sort of track that back. That's probably difficult to do, but not impossible. Some places have experimented with requiring increased information for selected taxpayers. For example, with businesses that have rental property, sending a letter out saying, we want you to itemize all the expenses. And what they found when they did this, they did a comparison study, a random sample, that there were more accurate reporting of those deductions. You can also increase the power of collecting delinquent taxes. We've already mentioned some of those, but the right to bid on government contracts, the vehicle license, revoking professional businesses fees, and driver's license. Improving service. I should mention that the Georgia Department of Revenue has moved in a lot of these directions. And so what we're suggesting here is not things that the Revenue Department isn't doing. Last fall, we put on a program, a session at the National Tax Association meetings in Washington, and invited the commissioner to make a presentation in one of the panels talking about compliance kind of issues. And he was the head of the program. He talked about what Georgia was doing, and people were saying, we need him running the IRS. So he was, what they're doing here is quite important. On improving service, simply becoming more customer friendly, easier said than done. Simplify the tax laws, make them understandable so that people aren't filing in error. You simplify the tax forms. In some cases that means reducing the number of lines. In some cases it may mean increasing the number of lines so that people actually see what has to be reported and actually do the arithmetic with the form. One experiment that was done, they found that when they reduced the number of lines, people were making mathematical mistakes. But when you included a deduction line, they actually made the calculations correctly. Edit the instructions, get a professional editor to look at the documents. Improve phone service, increase the number of lines, the number of operators, the hours of operation, and improve training of operators so they don't make errors when they answer questions. You improve the website. That's being done. But remember, a lot of taxpayers have 8th grade educations, and you've got to have a website that allows them. You also allow submitting of questions on through the internet rather than by phone. Jim mentioned emphasizing the link between payment of taxes and receipt of government services, so you see that taxes are a payment for benefit. And then cultural changes. How do you change the norm? States are using mass media to try to do that. They're sending out letters, either talking about the need to file because it generates the benefits, or making the case that this is the norm, that most people file, we collect most of the taxes, and not filing is not the right thing to do. We target certain groups to do that, do education programs. The Department of Revenue is doing some of that. New firms, new employees, high school, college graduates. We list other organizations to promote, get teachers, retired police officers, to talk about the importance of complying. You want to avoid having people think that cheating is okay. When the IRS was vilified in Washington, compliance rates went down because they thought, well, that's a bad organization. We don't have to work with them. We don't have to pay. So those kind of speeches yield a result that cheating is okay, not the norm. And then inequities in the tax structure lead to perceptions that this isn't something I want to deal with. So having a tax where you feel that you're paying an equitable amount will increase compliance as well and lead to a positive norm towards taxes. So that's our story. We'll be happy to answer any questions.
Any questions for Dr. Sophie?
Not so much a question. I just want to thank you, Dr. Circus and Dr. Holm. That was an outstanding presentation, and probably more on point as far as consolidating and framing the issue that's under consideration that we've had at any meeting. And I want you to know how appreciative I am of that, and take from your presentation and your written comments many outstanding suggestions, which I hope will maybe show up in the form of improvements in our code in a very short time to come. We thank you very much for that.
Thank you. Appreciate the compliment. Thank you for staying. A long day.
That was delightful. That was a good presentation. Thank you. Is there, if there are no other questions, thank you, Doc. Thank you. And Jim, too. For those of you that didn't get enough of this will be on the website tomorrow. But this, this is part of the new House rules, and it'll be part of the House communication has been filming it. And so that's at www.legis.georgia.gov. Before I turn it back over to Larry, I'd like to thank Chairman O'Neill for allowing this to come to Marietta. I think it's great that we're sharing this around the state. And I'd like to thank Ward Lamb here and the House Communications for what they've done, and for the 24 people that have helped in one way or another. I would just like to thank you, because I think it's been a good experience for the state and other, and especially Southern Polytech. Thank you. I'll turn it back over to you, Mr. Chairman.
Well, thank you, Chairman Tumlin. I certainly want to thank you for all the hard work that you put into to organizing this very organized meeting, and I mean that sincerely. Certainly want to thank our friends in the city of Marietta and all the government from the city that came and shared with us today, and Cobb County for your very sincere and candid comments, all of which are very helpful to the mission of this committee. I realize this is not sizzlingly interesting stuff, but it is sizzlingly important to the state of Georgia and the citizens of the state of Georgia. And to the extent that each and everybody in this audience and others around Georgia have contributed to this effort, we're grateful. We truly are grateful, because you're giving us tools that we need to do the best job we think we can do for you. But again, thanks to Representative Tumlin and all members of the committee, our Senate colleagues here. Thanks for your involvement in the process and your very astute questions. I'll just close by saying the next meeting is going to be down in Griffin somewhere.
Yes, sir.
It's going to be on August the 9th. We know that already. The place, I think, probably
University of Georgia, the Griffin campus, University of Georgia.
Go Dogs Griffin campus down there in Griffin. We're looking forward to that, because it's the obvious segue from collectability is compliance. And we're going to hear from a lot of these incredibly interesting, witty CPAs around our state. I remember the joke when I was in accounting school is that I was there because I didn't have enough personality being engineers. So we're going to hear from a lot of our friends in the business, especially on the side of compliance, and I think it'll be one of our more interesting missions. So without any further, if there are no further comments from any members of the committee, I think we'll adjourn and thank everybody for your involvement. Thank you.